Good afternoon, everyone. Trader Tim from eMoneyMind bringing you a Thursday trade recap video. Today's October 27th, 2016. Today we ended with a really nice trending day. Engulfing pattern, meaning the high and the low were outside of the previous day's high and low. Coming into the day, we were hovering right around the top of last week's high and right along that downtrend line as well. So earlier in the week, Tuesday, Wednesday, we just kind of circled around, Monday, Tuesday rather, circled around that downtrend line and ended up pretty flat on the days, didn't get much follow through. But today, Thursday, with the gap up and gapping up outside of the previous day's range, we ended up with a 5-minute setup that worked out very nicely. If you were able to catch the live webinar this morning with Infinity, we talked about how the setup unfolded. The short below the low of the first 5-minute bar gets you into the trade just by putting a buy stop above highs and a sell stop below lows. Whichever one triggers gets you in. And then as the trade begins to make new lows, you can just drag your stop down, down, down until a candle pierces the previous high. Now, you got a nice first leg lower, a little bit of a consolidation, which sometimes stays within the candle's range, the breakdown candle's range, but other times you come up and pierce a little bit and then you move lower. Really the only way to trail your stop in such a way that keeps you in the next leg down is to trail swings. And with that, you would let the market make a low, pull back. As soon as it makes a new low, you can bring your stop from -6 and then put it above the most recent swing high. Market makes a new low, pulls back, and you'll notice a lot of time is going by before we make a new low. It was almost at the close before you're able to capitalize on the trade and close out before the end of the day. So, it's not so important if you miss leg number 2 or don't get out at lows or don't get out at highs. Just capturing, a portion of the move is just fine. You don't need to kick yourself. On the 512, once that setup finished, or once the consolidation occurred and the stop was triggered for the first 5-minute breakdown, we had a 512 tick setup that could have got you in the next leg lower. Enter at the 50, moves lower. As soon as we break the swing low, you can start trailing your stop above each candle's high. And again, down here, you'll notice we had 3 candles that are all within the breakdown bar. So I just leave my stop above that high. And then we got a hammer down here. That's when you can move your stop down, and then the next candle pierces that previous bar. Now in this case, if you're trailing swing highs, you have a much shorter time frame. Market comes down, rallies 1 candle, makes a new low. You can move your stop above that high. Rallies up, makes a new low. You can move your stop down again. Market rallies up, at which point we continue up. And it knocks you out of the trade just a little bit further. But you have opportunity to, as the market continued selling off, to start with a swing trail stop method, and then as we really started to sell off down here, you could switch to trailing candles, and then as a kind of modification to be a little more conservative on the front end and then take more aggressive approach towards the latter end. So that's kind of what I was looking at this morning. The ES is still in its descending triangle, and I think we've still got room down here to either move lower to 2107 and then come up for another test of the downtrend line, and we'll see if that can happen next week. I suppose there's the possibility tomorrow to turn around and take back all of what was sold off today, but we really need to get a solid pierce of the downtrend line and a swing high break. And on that swing high break, it could be where we come down to the 2107, start to reverse, and then we gap up above that downtrend line. That would be a great opportunity to initiate some long plays. If we come down to this 2107 and break down, it should be a pretty swift move down to the 2086, and maybe even a little dirty and into the middle, because you have a lot of longs that have stops down below. So that's kind of what I'm looking at going into next week. Not expecting anything crazy tomorrow, but there's always a possibility to come down to the 2107, or maybe take back what we did today, or even just kind of chop around right in the middle. So if you have questions, shoot me an email, tim@emoneymind.com, or you can join the trading room over at emoneymind.com/VIP. Thanks. We'll talk to you next week.